Dealing with the IRS is all about speed. If you can get on top of any letters that come in, any communication with the IRS, immediately get them the documentation that they're looking for with an explanation around why you took that expense with valid proof of the expense, you can alleviate 99% of audits that actually end up happening. IRS audits happen over two different things: mistakes and you reporting things in categories that you should not have reported things in. That being said, sometimes business owners make mistakes off their tax returns and they'll receive a letter from the IRS. And by the time that they've actually looked down at that letter that's been in their mail for the last 30 days, the IRS has already told them that they should have responded by a particular date. Now you have an actual human instead of a computer that gets assigned to you, and that person can determine whether or not to go into an audit or just keep assessing you until you can determine with the IRS that your expense is justified. Typically with the IRS, you're guilty until proven innocent. It is your job as a taxpayer to provide substantiation over your expenses to the IRS to thus justify the expense that you're trying to take and alleviate an audit from ever happening. But if you can't provide the documentation or what the IRS is asking for in a timely manner, the IRS can have probable cause to open up an audit case for you, where now they want to look at more things than that little expense that they were looking at.